Welcome back to the final segment of Investing with Confidence. As always, I am your host, Joshua David. And if you're just tuning in, you just missed Al talking about retirement or what to do if the retirement you are living is not really what you expected. There's different techniques and concepts to apply before then so you can reach those
Mhm.
golden years of retirement and enjoy, because that's supposed to be that enjoyable time of your life. You don't want to spend your golden years living at the golden arches. If you happen to miss two tickets for the investing class, call 952-814-4410. You also receive the financial quick start kit, which has topics on strategies for increased performance during declining markets, but also in up markets as well. The potential to do that. There's topics on what those could be looking like. So you can text the word invest to the number 484848. You receive a link back to register for this class, but you got to register for the class. You'll receive that when you attend. So as we get into this final topic here, we've had a great show here today. We've talked about these different income potential strategies, an overall market update on what's going on, the opportunities. It's the Oprah market. Here's an
Mhm.
opportunity, here's an opportunity, and there's an opportunity, but they're not underneath your chair. They're in the stock market. And we're having a lot of listeners that want to get involved in these markets, especially get more involved with their 401ks, their IRAs, and having the potential to sleep better at night, knowing they are protected. So let's continue that discussion on retirement techniques and strategies. But with IRAs and 401ks, we're seeing a lot of people coming into the academy, and some of the common themes. And I know you've talked to a lot of people here and help people gain the confidence and the consistency to self-direct,
Mhm.
right? So, what are some of those techniques people might be able to apply if they're listening right now in their retirement accounts to protect them, to grow them in any market condition or have the potential to, but to do that with consistency?
Right. Well, first of all, if you have a retirement account, know what's in it. And I would say the majority of the people we talk to really they know they have something in a retirement account. They know it's probably mutual funds, but they really don't know what they have and why a particular asset was chosen. So that's number one. Understand what you have. There were probably some choice. Well, undoubtedly, there are some choices that will perform better at certain times than others. Our core strategy, which you can use if you're trading or investing in the stock market, futures market, Forex, or options market, can be used with mutual funds too. So you can learn how to trade within your employer sponsored plan if you're still working to maybe get some better returns there. We can show you how to have something set up where you can protect those assets. But I think the most important thing that our students look forward to is transferring their assets when they retire or for whatever reason leave a company, transferring from their 401k, 403b, whatever it happens to be, into a self-directed IRA. Now, you can have the same assets in there for the most part that you have in a employer sponsored plan if you want to do that. Don't think you will once you understand some of the things that are happening within those assets. But now you have many more choices. You can invest in stocks. You can invest in exchange traded funds. You can invest in the stock in the futures market, in the foreign exchange market, in the options market. So you have access to those leveraged assets that give you the opportunity to have boosted returns. You have the opportunity to have total protection over your assets. You have the opportunity to participate in a down market. Or what about a sideways market? If the market's flat, how do you make money? Well, there are assets that you can use that really it doesn't matter whether the asset is going up or down or sideways. The potential there for you to benefit is still there. So you don't have to be directional. In other words, you don't have to identify which direction the market is going to go for you to benefit. But all of these choices are there for you if you have the right education. And those are choices that have many more benefits to you than you have in the assets or in the portfolios that your retirement money is in now. So why not utilize those? Why not at least understand or learn a little bit about them to see if this is something that might be right for you to venture into? Maybe you want to take a different journey with your retirement money and have a better chance of achieving the retirement that you hoped to live. And remember, things change. I mean, we're living in a complex world, a world where things change on a regular basis. Maybe what you have put together, the plan you have for retirement, if you have one, is based on old data. Maybe it's based on a rate of return that no longer is adequate for you. Maybe you have some issues like health issues or issues with kids or grandkids. A number of things that could change what maybe was put together in a plan years ago. So you need to be flexible enough to make some changes. Understand that the education is there, the knowledge is there, the skill building is there to be able to use a number of different choices. You take much better control over your assets. And also remember that if you want true financial independence, you can't have it if you depend on somebody else to make your financial choices for you.
You're right. People want to be able to depend on themselves and not depend on somebody else, like a broker advisor. Nothing against the people, but so many of our listeners are depending on someone else
Right.
to reach their financial goals. Think of it this way: your broker advisor, their job is to gain assets under management. It's not to manage your portfolio. That's the job. More assets under management equals more commissions towards them. And if you want to learn more about those different techniques where you can utilize to have opportunity in all market conditions, you just got to do it yourself. Quite frankly, people are doing it themselves right now and still paying somebody to just hold it.
Hmm.
Think about that. If you're paying somebody to hold your capital, where you can do the same thing yourself, lower the fees, or even have the potential to eliminate them, that could be a percentage return in itself, right?
It is. It's a huge. It has a huge impact on the potential returns you could have.
Yeah, and there's so much opportunity in the markets right now that people are just not taking advantage of. And we do have a lot. I mean, we've had a lot of listeners text in today and call in today on how to get started with these markets and take advantage of these opportunities. So I want to give everybody an opportunity right now to join one of these investing classes. They're free right here on Bloomington. Al teaches these. We're next to the Mall of America, so real easy to get to right off 494. And these are classes where we've taught thousands, just like you, are many strategies which are designed to teach you to make better investing decisions. So I'm going to give away 20 tickets when you call in right now, 952-814-4410. I also make it easy. You can text the word invest to the number 484848. You got to register with the link that you'll get back right away for that free investing class, plus the financial quick start kit. You'll receive that when you attend. Talk a little bit more about minimizing fees. The best way to do that is self-direct.
Hmm.
But
Hmm.
if I guess, talk about what the fees actually are. I know you talked about it a little bit, but I mean, talk about mutual fund fees, load fees, front end, back end, all that stuff.
Yeah, well, there are a number of different fees that are involved with a retirement plan. If you have a mutual fund, if your retirement plan is made up primarily of mutual funds, there's some significant fees that could take. And I talked about this last week. Though the fees could really, over the course of your working years, with money you're putting into your retirement accounts, could cost you 50 to maybe 75% of what you could have. That's what I said, what you could have. So are you okay just having 50% or 25% of what you could have in your accounts? Probably not. And think about this. What kind of value did you get for those fees? If you look at the returns of your portfolios, your retirement portfolios over time, you're probably not going to be very happy with what you see. The fees alone, if you can eliminate the fees, that can have a huge impact on the rate of return that you have. Mutual funds have mediocre returns, 80 to 90% fail to meet the index that they're supposed to perform with. And there's a number of reasons for that. You mentioned a commercial before, you're in good hands.
Insurance,
Well,
yeah.
who's paying for that? The people that are buying mutual funds and have mutual funds in their accounts, you're paying for all the commercials, for all the advertising they do. You're paying for their legal fees, administrative fees, a number of things you will never see, you don't know about, and you're not being told about them. But that has a huge drag on what you could have in retirement.
Yeah, just to paint a little picture, and I'm kind of stealing it out of your book. I mean, think if you have, and you say you go to retirement, you put all of your retirement money on a table.
Right.
You leave your door open at night, and a burglar comes and takes some of that money off of that table. You now no longer have something to live off of. That's the fees that can dwindle down an account over time, right? Now, what if you had, that window open? Say you put that pot of money on the table and the window's open, the wind is blowing. there's dollars just going off. But then again, you have the spouse needs a couple dollars. You have the kids or the family taking a couple dollars. Learn the techniques and strategies to potentially keep more of your capital, not have it dwindle down, but learn the strategies to have the potential to create income off of that capital. Al teaches those strategies in these investing classes. It's also in the Financial Quick Start Kit. When you receive that quick start kit, when you attend, there's techniques or strategies and topics on how to use the markets for income potential. So one last set of tickets for this investing class. Al teaches these here in Bloomington. They're free right off 494. Call 952-814-4410. You can also text the word invest to the number 484848 to receive the Financial Quick Start Kit and the free class. You got to register with the link in that text that you can get right back. Al, you always have great tips and great wisdom. Let's hear the OTA tip of the week.
Well, you know what? I'm going to take a little bit of it from a motivational website, a Mark and Angel Hack website. They said this: you can't lift 1,000 pounds all at once, yet you can easily lift 1 pound 1,000 times. Tiny repeated efforts will get you there. The same thing is true in trading and investing. Trading is like a marathon, not a sprint. You're not going to be a pro overnight. It's a process. And if you want to master it, you have to take it slow. It's like a marathon runner. Nobody is born a marathon runner. You have to go through some steps. You have to learn to crawl. Then you learn to walk. Then you learn to run. Then you learn how to run a marathon. Same is true in trading and investing. If you want it and if you believe in it, you're on your way to achieving it.
That's that consistency. Consistency brings better choices. Once again, 952-814-4410 or text the word invest to the number 484848. As always, same time, same place, right here. Retire young, my friends.